Hi, I'm Eugene and I'm with Galvin today. So recently there have been a lot of news reports, some good reports and some bad reports about the property market. So we actually receive a lot of queries from our buyers and we have categorized them into three most commonly asked questions and we are going to share about them today. Okay, so the first question is, will the property market crash? My opinion is that the property market most probably will not crash. Okay, the reason is being, if you look at the chart for the stock market and property market, you'll realize that there's actually quite a strong correlation. Okay, in 1997, during the Asian financial crisis, when the STI actually declined quite drastically, okay, you can see that the property price crashed as well. In 2008, during the global financial crisis, when the stock market crashed, the property market dropped as well. Okay, so how about 2020 during the COVID-19? Let's look at the next slide. If you focus on the third column over here, okay, you will realize that when the stock market dropped to the lowest point, okay, the crash was about 30%. But the property price has remained pretty stable, okay. There have been slight declines of about 1 to 5%. So why is this so? Okay, the main reason is because in 2008, after the global financial crisis, due to quantitative easing and the printing of money, right, there was actually an asset bubble forming in Singapore. Okay, this leads to a huge and very fast increase in property prices. Okay, the property prices increase, right, was actually much faster than real income increase, and this is very unhealthy because the property price is increasing so fast that the young people couldn't afford to buy a property. Okay, as such, the government has to react by implementing cooling measures. So this actually was like a safety measures, a bit like mattresses to prevent a crash. Okay, some of these measures is the seller stamp duty as well as the additional buyer stamp duty. Okay, these two stamp duties actually leads to less speculation. Okay, you don't hear about flipping anymore because people have to pay more when they sell and they have to pay more when they buy. Okay, the next is related to loan. There's no longer any more 90% loan. The first loan you can take is only 75%, and the second loan you can take is 45%. At the same time, you need to ensure that you fulfill the total debt servicing ratio, which means that you can use only 60% of your income to service the loan. As such, right, nowadays there's not so much over leveraging for the buyers. The buyers are more prudent, and so you don't really see much fire sales in the market right now. And to put things into perspective, the population actually increases by 1.1 million from 2007 to 2019. Okay, pretty amazing, isn't it? But despite the increase in population, right, what you see is that the sales transaction actually decreases. The sales transaction actually decreases from 210,000 from 2006 to 2012 to 135,000 from 2013 to 2019. This is largely because from 2013 to 2019, there is no more speculation due to the cooling measures. All the 135,000 buyers are mostly genuine buyers. They are in for the long haul and they have an investment horizon of at least 3 to 5 years.
The next question to ask ourselves is whether this is a good time to buy properties due to the current market sentiment. You always have to ask yourself this question: are you badly affected by the COVID-19 pandemic? And if you are not, this could be a very good opportunity for you to enter the market. And why do I say so? Because from the year 2008 to 2013, there were 3 instances of QE in the US. Okay, and during that period of 5 years, okay, you can see that STI was increased by 6.2%, while Dow Jones Index was increased by 31%. However, during the same period, property prices increased at 31.6% instead. Next, we can see that the foreign non-resident deposits in Singapore reached a record-breaking 62 billion in April 2020, which signifies that Singapore is a safe haven for your savings. And you can also take advantage of the current low interest rate climate where, because of the low interest rates, it has led to substantial savings for property buyers. And finally, you can see from this table over here that during the circuit breaker, okay, there are also robust sales during this circuit breaker period, even when sales galleries are closed. Now, the next question is, where should you buy? We always ask ourselves this question. So when you purchase any property, it is important to pay attention to the master plan. The master plan by URA outlines the growth and urban transformation in Singapore for the next 5 years and beyond. We have actually consolidated a handful of projects and opportunities in upcoming launches, which are benefiting from the master plan. And here's the 3 most frequently asked questions by Eugene and Galvin. If you'd like to find out more on the market situation due to the COVID-19 pandemic, or if you'd like to know more about the master plan and urban transformation, do let us know and we can share more in details via Zoom. This is Galvin and Eugene signing off. Thank you for listening.